Hey guys, PK here. Hope you're doing really well. I'm here in the park, well, sort of park, Gasworks in Brisbane with my family. There they are, right there. I don't know if you can see. So today I want to talk about, well, exactly what strategy I use to retire from property investing. So when I say retire, I mean I still work, still have various passions and projects and like a meditation center, and I help people invest and other things like that. But how to make a passive income from property investing, a six-figure passive income, you know, and not like 30, 40 years, but in sort of 7, 10, 15, maybe 20 years, the exact way that I did that. So there's really 4 parts to this strategy. The first part is that you want to buy positive cash flow property. Okay, so what I mean by positive cash flow property is that it should give you money in the bank, money in the door after all expenses. So rent is more than all of your costs, your council rates, your property management fees, your insurance, your interest rates, everything like that. Each and every property should be giving you money after all expenses. That's one side. So this is a 4-sided strategy. Let's call it a diamond for, you know, kind of a catchy term. And that's the first side of the diamond. The second side of the diamond is growth. Now, not just long-term growth. We don't just want growth after 5 years. We don't just want growth after 10 years or 15 years. We want the property, each and every property, to be going up in value in the short term. Now, what that means is that, and by the way, this is really what you need. It's not that this is a nice to have. This is what you need to be able to, in a year, in 2 years, and 3 years after buying the property, extract value out of the property, extract equity out of the property, not selling it, but simply recycling the debt, refinancing the debt so that you can buy another property, and then another property and another property. In this way, you can accumulate, let's say, 3 to 7 properties over a 10-year period and get to that passive income goal. Now, what was I going to say? That can't be achieved if you're relying on the property to increase after 10 years. You need it to increase in the short term. And the number one mistake that property investors make is that they think that buying close to a train station or close to a park or close to the ocean or, you know, somewhere with good views, that these are the types of characteristics that drive growth. Yes, they drive growth, but only in the long term. A property that's close to the beach or close to a park or close to a train station, a hospital, a school is not automatically going to increase in the short term, because if it did, that would mean that they increase all the time, and they don't. Okay, so the way to find short-term growth is by assessing data and getting a balance between demand and supply. And most property investors, in fact 99% of property investors who aren't educated, what they do is they say, well, demand is always going to be strong for this suburb because it's close to this, you know, these amenities. But what we're trying to find is whether demand already exceeds supply right now. Not in 2 years, not in 5 years because of some infrastructure boom or because of population growth or anything like that, but right now. That takes the gamble away, that takes the guesswork away, and that means that we can be very, very, very sure with conviction that this property is going to increase in value, this suburb is going to increase in value, right? In fact, it would have already started if the data is good enough. Okay, so the first side of the diamond was positive cash flow. The second side of the diamond is short-term equity growth, not long-term, well, as well as long-term. And that way we don't really need a deposit, or we don't need a huge deposit. My son is running around like a maniac. That way we don't really need a deposit after the first property. Of course, it's always nice to save money and contribute towards your property portfolio, but if you can extract equity, then you really just need to save up for the first property, and then it's like a snowball effect. You know, like a snowball, it gathers more snow as it drops down the cliff or down the mountainside. That's what a strategic, high-performing property portfolio does. It doesn't require you to chip in more money, either to hold properties or for subsequent deposits significantly. Okay, so that's the second side of the diamond. I'm still on the second side. The third side of the diamond is that we want to buy properties that we can add value to. Now, Whether that means that we can renovate, by renovate, I mean you can put in $20,000, increase the val by 60, 70,000, then have that equity for the subsequent property as a deposit for the subsequent property. Or whether it means you can subdivide and create chunk deals that way, or whether it means that you can put a granny flat at the back or at the side and increase your yield, thereby increasing your borrowing capacity and maybe equity, although granny flats aren't great for equity. We want a property that we can do something with. Buying an off-the-plan apartment or house means that it's stuck. It's as good as it will ever be, really, for the next 10 or 20 years. So that's why we want a property, you can hear my son, that we can do something with, right? And that doesn't mean that it's not tenantable. That doesn't mean that we need to spend this money immediately. We want the potential to be able to make money even in the future when the market is flat, buy a granny flat, buy development, buy renovation, and this is all the sort of stuff I teach. And then, so that's the third side of the diamond. And the fourth side of the diamond is that we want to buy under market value. So I don't want to pay more than what the market wants for that property. That's the worst case scenario, all right? Overpaying is out of the question. At the very worst, we want to pay the market valuation, but more than 70-80% of the properties that I've bought and my clients buy, or they try to buy, are under market value. Now, this is not some sort of marketing gimmick that means you get the property 30% off, but this is something like, even if it's as little as 10,000 under the market value, that's immediately giving you 8,000, 80% LVR, 8,000 deposit head start for your next property, right? So generally we want to buy between $10,000 and $30,000 under market value. And so that's the fourth side of that diamond, right? And this diamond strategy, this is the exact strategy that I used personally to get out of the rat race and sort of develop a passive income of 6 figures. And it's, I'm not a special person. I'm really not. Anyone can do this, of course. You do need a job. You do need a job that pays higher than the minimum wage to achieve this. But if that's you and you have your first deposit or you have equity in your house, then you can definitely achieve this ambition. If you already have a few properties in your portfolio, just ask yourself, am I on the target to achieve a 6-figure passive income in 7 or 10 or 15 or 17 years time? And if you're not, then maybe you're not applying this diamond strategy, these 4 sides of the diamond: positive cash flow each and every property, high growth, not just long-term, but short-term, every single property, right? Simultaneously with cash flow, under market value and potential for development, chunk deal, subdivision, or renovation, right? That's really what you need. And then what I personally used in my portfolio to then really supercharge the portfolio, it's kind of like taking a Toyota and putting a V12 engine into it. The Toyota being me, because I'm not special, but putting a strategy that's equivalent of a V12 engine, super, super powerful. It's where you do commercial development. Now, whether you do it yourself or whether you simply access those types of returns, and I'm talking 10 to 15% plus per annum returns, leveraged or unleveraged. This is really how you take a 6-figure passive income and turn it into, I'm not going to say seven figure, I'm not there yet, but that's how you turn it into a $150,000, $200,000, $250,000 per annum income plus, over the long term. That doesn't happen in the first 5 years, doesn't even happen in the first 10 years. But once you have equity, that is what is potential. Well, that's what's possible for you. You don't need to do it yourself. You simply need to know how to access those returns in a risk or relatively risk-free way. There's always risk. Anyone who says that it's risk-free, you shouldn't really be trusting them. So that's the diamond strategy. And then if you can take the Toyota, which is someone ordinary like me or perhaps you, and put a V12 engine behind that property portfolio by commercial development or large-scale land subdivisions, you don't have to do it yourself. Don't be daunted. That's really how you take that portfolio that's pretty good, really reliable, like a Toyota, like a Camry, really reliable car, but it doesn't get to 0 to 60 in less than 2 seconds. if you really want that, then you add this final step. But look, the point of this message is not really to glorify myself, because I'm not really worthy of that sort of stuff. It's just to say that this 4-sided diamond strategy is what you need to go for. And look, I think there's other people teaching it. I think that you can do it yourself. I think there's buyer's agents that can help you. I think that everyone's an expert in Australia. But if you think you vibe with me, then I can help you genuinely and sincerely, and I've done this for hundreds of clients before. But even if it's not with me, hope this video gave you a lot of education. I hope it gave you a lot of confidence to really embark on your property investing, or accelerate it if you're already a property investor, in a really sincere and serious manner. All right, guys, well, if you like this video, please give it a like or love on Facebook, and then you'll start to see more of these types of videos. And if you're on YouTube, please hit subscribe below. I'm trying to grow my YouTube channel, as you can see. And I'm just gonna give you more and more and more value, okay? So my name's PK. I hope you're really well, and I'll leave a link below where you can find out more. Have a great day, guys. Back to my family who's screaming there in the background. All right, guys, bye.